What is going on, my friends? Ryan Williams here, back with another one, and like most of you guys, I'm sure, I'm not perfect, okay? I have my good days and my bad days just like everyone else, okay? I make mistakes, errors in judgment, and I'm learning that this is especially true when it comes to dividend investing. You see, lately I've been reflecting on some of the investing moves I've made these last couple of years, and I've been going back and rewatching some of my old videos, and I found that there's been a few occasions actually where I sold out of some really good stocks that I probably should have held on to, which brings me to the topic of today's video. In this one, guys, I'm going to be sharing with you what I think are some of my biggest dividend investing mistakes, including all of the stocks that I regret selling out of and the potential profits that I've left on the table from selling out of these stocks. Anyway, before we get rocking and rolling, give this video a big thumbs up if you have made some investing mistakes of your own. And if you feel so inclined to do so, leave me a comment below and let me know what those are. I'd be curious to hear if there's any stocks that you guys feel like you sold out of too soon or even bought too late or just bought at the wrong time. Anyway, thank you guys so much for doing that, and now, without further ado, let's get into it. All right, guys, now getting right into it, the first stock I want to talk about is the one that I probably regret selling out of the most, and you guys are probably going to kill me for saying this, but that stock is Apple, ticker symbol AAPL. Now, if you guys have seen this video right here, which I will actually include the link to the video in the description for those of you who haven't watched it, you'll know that I sold out of all of my Apple position a handful of months ago to buy into Southern Company. And like I said, looking back on it, guys, I think that was a dumb move. And at least one commenter has agreed with me and even went so far as to say that I have made a life-altering bad investment by selling out of Apple. Now, I don't know if I would go that far, but like I said, I'm definitely feeling some regret by not being a shareholder of Apple at this current time. Now, all of this is not to say that I regret buying into Southern Company, because I really love Southern Company and it's actually performed very well for me for the last 6 or 7 months that I've owned it. I think in my own portfolio, it's currently up about 13%, so it hasn't done too bad. But selling out of Apple to buy into Southern Company is most definitely not a move that I would even come close to considering making today. If I was to go back in time and redo this all again, I would have just held on to Apple and would have dollar cost averaged my way into Southern Company and would have just built out my position over time doing that. And from revisiting my old videos, I learned that this type of move, selling out of one stock to buy into another, is one that I did on a handful of occasions, and in most of those cases, I do regret it. And I'll share some more examples of this as we progress through the video, but for now, let's take a look at Apple and see where my position would be at if I would have just held on to it. So as you guys can see on the screen now, what we're looking at is a screenshot from my very first dividend portfolio tracker video. And in this video, I'm still holding Apple at the time. And I don't know if you guys can see that. I'll zoom in on it a little bit. In this video, it looks like I have about 8.89 shares of Apple at an average cost per share of $104.89, which is actually pretty good considering where it's at today. And this next screenshot here, guys, shows when I sold Apple, and it looks like I sold all 8.89 shares at $118.50 per share, which is not too bad. I made a pretty decent profit. It looks like about $14 per share, right? Just based on the average cost per share of $104.89. But if I would have held on to this Apple position, I would have a lot more money today because it has just done nothing but go up in value since I sold out of it. And to delve into this a little bit deeper, guys, let's do a couple quick calculations to see how much money I've left on the table. Now, the first place I'd like to start is just by calculating my cost basis. So let's take the number of shares I had, 8.8863 shares of Apple to be exact, at an average cost per share of $104.89. And that brings us to a cost basis total of $932.08 invested into Apple. Now, as you guys can see here, the current price of Apple is $154.91 per share. So basically $50 more than what my original cost per share was with Apple. And if we were to sell all 8.89 shares of Apple at the current price of $154.91, we would have a total of $1,376.58. Now, if we take the difference between these two numbers, that 1376.58 minus the original cost basis of $932.08, we can see that my total profit with Apple would have been $444.50, which is a total gain of 47%, which would have made Apple the best performing stock in my portfolio if I would have just held on to it, guys. The top performing stock in my portfolio right now isn't even up like half the percentage that my Apple position would have been if I would have just held on to it. Now, like I said, guys, I'm up quite a bit with Southern Company, 13%, so the trade wasn't a total wash. But I definitely left some money on the table by selling out of Apple, and at the end of the day, it's still such an incredible company to own, which is another reason that I regret selling out of it. I probably shouldn't have done it. But you live and you learn, and such is life, guys, and that's all part of the journey. You learn as you go, and like I said, I wouldn't make that same mistake today, but it's just something you have to go through as you're as you're learning the ropes. It's just the trials and tribulations of being a dividend investor, I guess. All right, guys, now moving on. My next biggest mistake was selling out of these stocks right here, Bank of America and JP Morgan. And the reason I'm lumping these two together instead of talking about them individually is because I sold out of both of them pretty much at the same exact time to buy into two other stocks, both of which are in the financial sector, Main Street Capital Corporation and Owl Rock Capital Corporation. So essentially, guys, I did a very similar thing that I did with Apple like we just discussed. I sold out of one stock to buy into another, except in this case, I sold out of two, what I think are pretty good stocks to own, to buy into two other, which actually have turned out to be some pretty good stocks to own so far. And I honestly don't remember how I divvied up the funds from the sale of Bank of America and JP Morgan to put into those other two stocks, which is another reason I'm gonna lump them together, but I know I definitely sold out of those two to buy into these two. And the reason I did this, guys, is because both Main and ORCC have considerably higher dividend yields than Bank of America and JP Morgan do. And at the time, I thought it would be a better trade to go for that higher dividend yield and more of that dividend income than settle for a lower yield if I could just get a higher one elsewhere. And looking back, once again, that's really not the best way to go about making these decisions. Plus, guys, I was up quite a bit on my Bank of America and JP Morgan position, so I figured, if I'm gonna sell it, now's a pretty good time so I can, collect on the profits that I've made so far. In hindsight, though, guys, I probably should have held on to at least one of or both of these companies, Bank of America and JP Morgan, and should have just dollar cost averaged into the other two if I really wanted them in my portfolio. Anyway, guys, let's take a look and see where these positions would be at today if I would have held on to them. Now, going back to that same screenshot we saw just a moment ago, guys, you can see that I had 27 shares of Bank of America at an average cost per share of $28.54 prior to selling, and I had 6.4582, we'll just call it 6.46 shares of JP Morgan at an average cost per share of $121.37 prior to selling. And to show you guys where these stocks were at when I sold them, I sold all 27 shares of Bank of America at $37.28 per share, and I sold my JP Morgan stocks in a few different batches, it looks like. So I sold those between, about $154 and $155, somewhere in there, which is really not priced too much higher than that today, which we'll see in just a minute. But going to Bank of America, let's calculate the profit that I would have just with Bank of America so far. So as you guys can see now, my original cost basis with Bank of America was $770.58. And that's calculated from taking the 27 shares I had times the average cost per share of $28.54 per share. And then next, if I were to sell these 27 shares today, which Bank of America is currently priced at $41.12, I would have $1,110.24, which if we do a little bit of math and take the difference between those two numbers, the total Bank of America profit today would be $339.66, which would be a gain of 44.08% above my original cost basis, which is huge. That's right up there with Apple, guys. Now, if we do the same thing with JP Morgan, my cost basis with JP Morgan was $783.83, and I calculated that by taking my 6.4582 shares of JP Morgan, multiplied that by my original cost per share of $121.37 to get that number. And then if I was to sell those basically 6.5 JP Morgan shares today at its current price, which is $159.58, I would have $1,030.60. And then taking the difference there, subtracting the market value from the cost basis, I will have ended up with $246.77, which is a total gain of 31.48%, which is wild. And then combining the profits received from Bank of America and JP Morgan, the combined profit there is $586.43. And if we take the percentage gain on that from the cost basis of both those companies, it would be a gain of 37.73%, which is just wild, guys, just wild. That is so far above where my Main Street Capital Corporation and my ORCC positions are currently at, which, like I said, makes me think I probably should have held on to at least one of those two companies, Bank of America and JP Morgan, if not both of them. All right, guys, now moving on, there is one last mistake that I would like to talk about today, and I honestly don't even know how much I actually regret this one, which I'll explain more in just a moment, but I absolutely missed out on some great profits by selling out of this stock too soon, and the last stock I want to talk about today is Berkshire Hathaway, ticker symbol BRK.B. That's right, it's not BRK.A. I would love to own a share of that, but that's just too far out of my price range, so BRK.B. Now, the reason I'm not 100% certain that I would even consider this one a mistake is because Berkshire Hathaway does not pay a dividend. And when I sold my position in this company, I used the funds that I received from the sale to purchase more dividend stocks, thus increasing my dividend income, probably by a substantial amount based on what I received from Berkshire Hathaway. But that is the only only reason I can justify this move. Otherwise, I think it would have been a good stock to hold on to. It's obviously a really good long-term stock to hold. And I don't have my original cost basis for Berkshire Hathaway, but I do have the sale information that shows what the price was at when I sold it. So we could compare that to where the stock's currently at today to see how much profits I missed on by selling out of Berkshire Hathaway when I did. Now looking at the screen, guys, you can see that I had a total of 11 shares of Berkshire Hathaway, which I sold in 2 different tranches. I sold one tranche at $231.58 and another one, the majority of my shares, at $234.65. And if we average out all that, that gives us an average cost per share of $234.09 at the time of selling, which brings my total with Berkshire Hathaway upon selling to $2,575.01. Sorry, I kind of stumbled through that. And then looking at the share price today, guys, it's currently priced at $279.31, which is substantially higher than where it was when I sold it. So if I were to sell those same 11 shares at its current price today, I would have $3,072.41, which if you take that number and subtract the amount of money I had when I originally sold my shares, we will be left with $497.40, which is how much money that I left on the table by not holding on to Berkshire Hathaway until today. Which if we put that into percentages, it means that I missed out on basically 19.32% more profit by selling out of Berkshire Hathaway at the time that I did. Now I'll say it one more time, guys. I'm really not 100% sure that I regret this decision because you guys know me, I'm a dividend stock investor. I gotta have my dividend stocks. That's imperative for me. Every single stock in my portfolio pays a dividend, and I really can't see myself straying from that. If anything, I would start a completely different portfolio of just growth stocks that don't pay a dividend and try my hand at that, but I don't have the money to contribute to that, which is why I gotta focus on my dividend stocks for now. And you know what? I'd be curious to hear your guys' thoughts. Do you think it was a good move selling out of Berkshire Hathaway to buy into dividend stocks? I mean, at the time of selling, I had, basically almost $2,600 to invest into dividend stocks, which, I can only imagine raised my dividend income probably, a pretty substantial amount. So let me know what you guys think about that in the comments below. I'd be curious to hear your thoughts. All right, guys, now those are what I consider to be my 3 biggest investing mistakes. And I am sure that I will make plenty more as time goes on. I have a lot of years of investing left in me. But with that said, I feel like I've come a long way as an investor, and I feel like I've learned a lot in a short amount of time. And I think that's due to a couple reasons. Number one, practice makes perfect. Every week I'm contributing to this portfolio, investing and spending time with this stuff, and that's obviously going to help you develop your skill set doing this. And number two, this is one I've said before, probably a handful of times, but putting out these videos really does help me, I think, become a better investor. Talking about this stuff and researching these videos or planning out these videos, doing the research for them, really helps me become more familiar with what I'm doing with this stuff, and talking about it, like I said, really helps it sink in for me. And number three, this is probably the biggest one, it's you guys. I have you guys to thank for a lot of this, because just like making these videos and talking about this stuff helps, interacting with you guys in the comment section and talking dividend stocks and hearing your thoughts and bouncing ideas off of each other helps tremendously. I can't even put into words how grateful I am to have these interactions with you guys in the comments. So please keep it up. Comment as much as you can. I love talking about dividend stocks with you guys. It's been one of my favorite parts of making these videos so far. So thank you guys. I appreciate you. But anyway, with that said, before we close out, I'd like to switch gears a little bit and give you guys just a little bit of almost a little mini portfolio update, show you where things are at, and then talk a little bit about what I'm buying this week. And the reason I'm doing this was actually recommended to me by one of my loyal subscribers, one of my loyal video watchers, my homie Kevin. Kevin told me in a comment, it'd be cool to discuss what you're buying on your Sunday videos for the week and why. Also mentioned stocks that have dipped that could be a buying opportunity, like AbbVie. Yeah, AbbVie has really taken a dump lately. But Kevin, thank you so much for the recommendation, man. I really dig the idea, and I hope you guys will as well. So let's switch gears and let's go to the screen real quick. All right, guys, so we are looking at Seeking Alpha. This is my entire portfolio, all of my positions here in Seeking Alpha. And let's take a look and see how things have been performing over the last week. So I'm gonna switch over to this performance page. Let's categorize it just by the last 5 days. And I don't expect there to be too much drastic change in a matter of days, guys, but it's still fun to take a look at and see where things are at. So looks like some of my top performers in this last week were Altria Group, which Altria, I feel like I've been reading some good stuff about them lately. AT&T, which is actually surprising because, as I'm sure most of you guys know, AT&T has just been really on a downward trend as of late. You can even see that here. It's really closer to the bottom of its 52-week range, and it probably will stay there for some time if I had to guess. Also surprisingly is to see Campbell's Soup in the top 5 performers in the last week. This one also has really been taking a dump lately, guys, but I'm actually not surprised to see Southern Company and AWR doing well. I feel like those have been on quite a tear lately and have done nothing but go up. This AWR position is now like, I think 21 or 22%. Or has gained about 21 or 22% in my portfolio so far, which is pretty crazy. I haven't held this stock for too long. And then scrolling down, guys, some of my biggest losers in the last 5 days or the last week or so have been 3M, which I haven't read anything as to why 3M is down almost 3%. I'm sure there's some reason behind it. So that's kind of interesting. And then AbbVie. AbbVie is down quite a bit in the last week. I think Seeking Alpha is tripping, guys. I think it's down actually quite a bit more than this. There's been a couple days where like AbbVie was down like over 7% in a day, and then it was down like over 2% the next day. AbbVie just really took a nosedive, which actually I think creates a pretty good buying opportunity for this stock. It was pretty affordable to buy before the 7% drop in the last, week and a half. But now, guys, it's really at a good buying opportunity. So if you've been looking at AbbVie, now may be the time to swoop it up. All right, guys, and switching gears, let's go over to my dividend portfolio tracker here. I want to go over to this diversification page, zoom out just a little bit here. Okay, good, so we can see more of the screen. And I want to talk to you guys a little bit about what my plans are for this upcoming week, what I'm going to be buying, what I've been up to, stuff like that. So I'm sure you guys, if you've been seeing some of my recent videos, you'll know that I started buying into Intel, ticker symbol INTC. And my primary goal right now is to build up my Intel position to be 3% of my total portfolio. So it currently is sitting at 1.86% of my portfolio, which means I have about 1.14% left to go, which means I'll probably be at this 3% mark in the next maybe 3 or 4 weeks if I had to guess. And then from there, I'm not exactly sure what I'm going to do, to be honest with you guys. I could add a little more communications, could add a little more consumer staples, which I actually just might. And I mean, like I said a moment ago, Campbell's Soup is really on the down and out, so it could be a good time to buy some more of that company. I also think Altria Group still could be a good buy, and that obviously pays a really, really good dividend. So I could buy into that as well. I'm not exactly sure what I'm gonna do, but I would like to build up my consumer staples to hit this target allocation. And you guys know me, consumer staples is like my favorite sector to buy into, so I would not mind at all picking up some more of those kind of stocks. One other thing that I've kind of been chewing on, which I probably should save this for like an actual legit portfolio update video, is adding another industrial stock. And I have one particular one in mind, but I'm not going to reveal that quite yet. I'm actually going to save that for the next video where I talk a little bit more in depth about this stock. So guys, if you are interested in the big reveal, which industrial stock I'm considering adding to my portfolio, check out the next video. It will be coming out in just a few days on Wednesday. I'm not exactly sure what day you're watching this video, but yeah, stay tuned for that. All right, guys, and that's about all I have for you for this video. I hope you enjoyed hearing about some of my dividend investing mistakes and also enjoyed that little portfolio update, future plan stuff at the end. If you guys would be interested in seeing more of that from me in these Sunday videos, please do me a favor and just let me know by leaving a thumbs up, and also leave me a comment below. Let me know if you like this addition to these videos. And that's about all I got for you guys for this video. So thank you so much for sticking around to the end and watching to the end if you're still here with me. If you have not done so already, please don't forget to leave a thumbs up on this video. And if you enjoyed this content and would be interested in seeing more from me, I would ask you to consider subscribing to my channel, hitting that subscribe button as well. I'm putting out videos twice a week. I upload every Wednesday and every Sunday. Okay, so there's some really good dividend stock content coming your way. And now I will get out of your guys' hair, but thank you once again so much for watching this video. Hope you guys have a great day, and I will see you in the next one.